Welcome to the Markets Happy Hour podcast, a weekly markets update for investors the world over. Each week we discuss inflation, geopolitics, interest rates, equity markets, and other asset classes. To try to answer the question, what does this mean for my investment portfolio? Let's dive in.
I have shown here a chart, which is the actually equity market in Japan, which up to now was up 40% in the past year. So quite a lot of counter movements there. And just some more charts in Japan surpassing 4% for the first time. It's a bit of an unusual turn of events there, suggesting perhaps a crisis of confidence, whether it be in the new prime minister and her snap election, or whether it's just a kind of a shock development, perhaps that will resolve itself. But I did find this interesting that something in Japan, in the bond market in Japan, could be a reason for shocking markets in the US. Do you think that perhaps the bond market is still something that gets watched to that degree, that when there's even a shock event in Japan, that could send chills into the US investor?
I think it could. And I think Japan has been a debt to GDP basket case for a long, long time. And I've been, as we've done our 10-year capital market assumptions, we build our projections. Japan's bond market is a big piece of the globe in terms of the overall global bond market. And we've always been blown away by how low Japan's yields are mixed with what a basket case they are. They look more like, they've been teetering on, if you just look at debt GDP, like a country that's on the verge of a crisis for many, many years. And so the market's seeming to now recognize today, as opposed to 3 years ago, 5 years ago, the basket case that is Japan from a debt to GDP growth is interesting. So the market's finally waking up. And I guess it means that, I think I would point to Japan and say, you always have more time than you think on a financial crisis to hit, because things can make no sense for a long, long time until one day the market wakes up and realizes what's going on, and that there's a very low probability that you're going to get repaid, unless, without significant currency debasement kind of happening. And that's sort of what happened with Japan. We actually used to give a big haircut to the Japanese bond market with the assumption of this day eventually being inevitable. And I think that the concern here is now that with Japan being maybe the canary in the coal mine, other people are going to look at other unsustainable kind of debt loads throughout the globe, including the United States. I mean, we got a long way to go before we're anywhere near as bad as Japan, but we are much bigger and much more important economy globally. That I think you could take a look at what's going on in Japan today and see it as a potential future if we don't get our fiscal house in order in the United States and get our debt and deficits back onto kind of more sustainable trajectories.